You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for a little program we like to call around these parts Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. Of course, going to break down some fun vol, a lot of fun stuff to do. You guys know how to get us, of course, live every Friday, 1 p.m. Central, 2 p.m. Eastern, or after the fact, pretty much on any podcast device of choice. If you can't find it there for some reason, let us know. And also, if you like what you hear, make sure for all the new listeners, we always get a new influx of new people all the time, and it eases them in if they could see your reviews in there. So if you like what you hear, head on over to your platform of choice. We don't judge which one it is, and leave those reviews. Of course, keep those questions coming. We do love to hear from you guys. And it's a special time of the year. Yes, it's once again earnings season. So we thought, who better to have join us on the Volatility Views panel today than our old friend, the keeper of all that juicy earnings volatility data, the reports, the analysis, the season report, all that good stuff, than our buddy, Mr. Matt Amberson, the principal over there at ORATS. Matt, welcome back to the program. You get to hold down the MIAX hot seat again today, sir. So welcome back to the show.
MIAX, Miami, and hot, they seem to go together. Great to be back. Of course, props to you for prodding us to get this earnings report out way back when. So excited to talk about, and the report's growing every year. We have some exciting earnings season overall reports to talk about, Mark.
Well, I'm glad. I will happily take all credit for it, sir, because it does seem like it's a hit. People like it. Hey, great earnings data that doesn't cost you an arm and a... Who doesn't like that? People have been asking us for years to really break this stuff down, so we're glad we got you guys to help us do it. We'll be joined by the greasiest of meatballs in a little bit. He's fashionably late, as always, listeners. We're going to kick things off. We're going to dive right into it with our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
everybody. Welcome to the Vol Review. This is indeed the portion of the show where we, surprise, review some volatility. We tell you what's on our radar here, what's going on in just both today and indeed the week that has been in the broad spectrum of volatility. Coming into the showtime here, we're seeing the markets taking a turn to the north here after kind of a weird, slightly up to mixed day yesterday. We're firmly in the green camp today. Most of the major indices up around 0.5% or so. The S&P, actually the laggard, only up a mere about 0.45%. Everything else up about 0.5% or so. So firmly in the green today. Seems like optimism about earnings and perhaps potential for trade, even though Pence talking an angry game against China, not really seeming to derail the markets today. Maybe some lingering Brexit optimism. Who knows? Gold, oil also on the up a little bit today, but just slightly. Oil's having a decent week out there as well. Listen to Twifo. We had a good breakdown of that yesterday if you missed it. And, of course, all that means our friend VIX and Spikes both taking a bit of a break today. VIX cash hovering right around that 13 handle. That puts it off over a handle from where it was this time last show, about 1.6 handles to be precise. Also got our friend over there in Spikes land. He's at about a 13.5. That puts us down about a little over a point, about 1.1 points from where we were this time last week. And, of course, our old friend VVIX continues to erode to the downside. Was north of 100, north of that triple-digit level not too long ago. Now well shy of that at about an 84. That puts it down 6 points from last show and off, over 15 from where it was just a couple of weeks ago. So volatility of vol coming in. Matt, as our guest, I'll give you pride of place here today. I know we're going to get to earnings in a little bit, but I know you also over there at ORATS, you got the RIA, you do a lot of broad sector analysis and a lot of general volatility and curvature analysis as well. So what's catching your eye from a broad volatility perspective, sir, before we dive into all the meaty earnings goodness?
Well, yeah, and also you remember that license plate of the VIX, VIX puts. So
that was you driving through Maine, right?
yeah. So I went and did a bunch of back testing, and I've had that position going. So I'm happy with this volatility meltdown here. And it's about earnings mostly, I think, and really people are just getting oversaturated with the China chat. So it seems like the markets are starting to melt up a little bit, and vol's coming in. And now it's more, I think, more of a stock pickers market. There's some things going up, things going down. Real estate's down a little bit today too. I keep an eye on that. With a house now, I'm a new house owner, so I'm watching the IYR. And I'm looking at spikes now. I'm going to jump in with my VIX put strategy with the spikes and see how that works.
Well, you are in the spikes hot seats. I think you're legally obligated to trade some spikes during the show, I think, sir.
Yeah, I'll put it up. It's there are a couple of huge trades in there, but not a lot of volumes peppered around. So we'll see how that looks.
Yeah, some big prints in spikes this week. We'll get to that in a little bit, but I do believe now we are joined by the greasiest of meatballs, Mr. Meatball. Welcome back to the Volatility Views program, sir.
It's great to be here. I'm happy to be here. I'm super happy and wonderful and excited to be here.
Super happy, wonderful, and excited. Sounds like we have a title for our show, sir. Just super optimistic.
Indeed we do.
The markets are certainly agreeing with you today. They're all in the green. So, Mr. Meatball, fashionably late as always, what is catching your eye in the world of volatility today and this week, sir?
I think we're seeing what, the combination of volatility falling off and a really, really kind of wide term structure come together to really force down VIX futures, VXX, the VIX itself, and really a lot of earnings across the board. We've now got a huge chunk of the earnings out that we were looking for. We got one more, I think, busy week ahead of us next week, and some rumors about China maybe not being okay, and now you have VVIX threatening 80 again, and you have the VIX about to break, briefly touching a 12 handle today. It was I saw it touch down to 1298 today. So I believe we have the low on 1292 was the low today. So we're talking vol is really coming off somewhat aggressively. the earnings have been pretty good so far, minus, a couple of real crazy story stocks. And we're seeing VIX futures and the VIX ETNs get punished through a combination of, volatility falling and a really steep curve.
Yeah, the market's not really, you're right, some concerning stuff coming out about China. The market's not really getting spooked by any of that. So interesting stuff. But Matt, we've been teasing them long enough. Let's get to it. I know you came on specifically because you're super excited about all things. Who isn't? Earnings are what's driving it. It is refreshing to sink our teeth into some micro stuff for a change. All this, the whims of the macro tide sometimes. It is hard to really to pin those down with any sort of concrete actuals, make some sense out of it. But earnings, we can do that. And this has been a hot week. Listeners have been popping off all week. Of course, Monday after the bell, we had Ameritrade, everyone's favorite, Del Taco. Tuesday, we had McDonald's, P&G, Snap, Chipotle. We got iRobot, Whirlpool. Wednesday, of course, Microsoft, Tesla, a bunch of the names you guys like to trade. Boeing, our neighbors across the street here, not looking so good for them of late. We had Twitter taking it on the chin. On Thursday, we had Amazon and Visa and Intel after the bell last night. Today, we had Verizon. Matt, it's an embarrassment of riches for you guys over there. So walk us through what's been lighting up your tape, what's been catching your eye in this just extreme explosion of earnings volatility, sir.
Yeah, let's start with the general. I mean, overall, this has been a bloodbath for option straddle owners around earnings. For example, usually, we'll see something like actual moves to implied moves in the 90%, 100% range. It's in the first week was in the 60s. We have never seen that, and then this week's in the 80s. So that's just an overall bloodbath for option owners. And another stat that I saw is that the earnings surprises, the percentage of companies that are beating their Q3 earnings estimates are now upwards of 60%, and that's never happened. So surprising to the upside, which is usually dampens the volatility, although those stocks have moved up, and had some movement, to the upside. But like Mark said, we've seen some big losers, Twitter and such. But I think the overall story is after last season's crazy movement, we've never seen that much movement in the last 5 years. For this one, just to be almost the direct opposite of that one. The market came in and adjusted their implied volatility, their implied earnings moves up, and nothing's no week has met that. So it's just a tough week for option owners, good week for option sellers. The exact opposite from last earnings, Mark.
Yeah, it is funny how it goes in those cycles, right? Pun intended, outside of the earnings cycle itself. Everyone bids up their straddles, and then they don't make it that season. And so the next cycle comes along, and they crush their straddles, and then everyone blows the doors off of it. It's very cyclical from that sense. And we're kind of seeing the latter portion of that now, where people are maybe widening them out a little bit and not living up to the hype. Let's profile a couple of them here, Matt, because there are so many. Of course, you guys want to see all the reports for yourself. There are literally hundreds of tickers that Matt and his team profile. Of course, theoptionsinsider.com is the place to go. Click on that options, news, and articles tab on the top right, and you can see all the latest earnings move and earnings move results reports. Of course, you can always head over to ORATS.com as well, ORATS.com for all the latest and greatest over there. Got some up-to-date numbers, Matt, coming in. Let's see. Let's look at Amazon first. That's the one that everyone's kind of fixated on right now. Coming into the time of their report, when you guys crunched the numbers, Matt, they were trading about $17.66. They were pricing in about $60, almost a couple cents under. That's actually light compared to their past moves. Their past moves were about 72, almost 73. And now here we are coming into the blush here of intraday, and they're off 32 handles net intraday. So apparently, if you were premium buyer, you were not looking too good. They dipped a lot lower. They got down. They opened actually down almost 50 handles lower. So if you were judicious, if you had the long premium, you got it off kind of right at the bell, right at the open, you could have maybe done all right. We all know that's a little bit easier said than done. So not exactly the case. And now, of course, Amazon having mitigated those losses now in the heat of today's joyful rally in the street. I guess Amazon can't buy everything forever, apparently, out there. Let's also look at some others here that were popping off earlier this week. What do we have? We had Intel. Intel coming into the report was about 52.5. Intel, of course, my old Stompin' Browns, near and dear to my heart back in my tail end of my days on the SIBO. I finished it up out there in Intel, and oh, how fun it was in those go-go.com 90s time there to trade a little Intel. Come into the report, they were at 52.5 or so. They were pricing in a whopping 66 cents. That's actually pretty light compared to past earnings reports. They priced in and actually have delivered moves of about $2.50. So Intel was actually kind of light, and looks like premium buyers maybe, at least in this case, were winning the day. Intel up $4, nearly 8%. That's a big move for Intel. So that straddle looking pretty good there, Mr. Matt. So I guess a tale of two earnings last night, huh? Intel looking pretty good. Premium buyers, Amazon, you had a brief moment, but then it kind of faded away. Is that your take as well, Mr. Matt?
Yeah, this is a funny earnings too, and I think you illuminated it well using Intel. On the upside, it surprised and went past its implied earnings move to the upside, which is what we're seeing. Overall, we're seeing a lot more volatility to the upside, just like Intel. And Amazon, disappointed to the downside, but it didn't go that far. So usually you'll see big, you trade stocks, the big moves are to the downside, but that's not happening in this earnings. It's the big moves to the upside, and they're not getting punished for their poor earnings this season, Mark.
Yeah, outside of the broad cyclical, not Intel aside, not really meeting up or living up to their straddles so far early in the season. Any other maybe surprises coming across your tape this season as you guys are crunching the numbers? You have become, because we have christened you have become the keepers of the earnings data over there at ORATS, Matt. So whether you want that title or not is yours. So any other surprises coming across your tape this cycle so far, sir?
Of course, Twitter, that was a huge move to the downside. I was looking and seeing if there were anything in the tea leaves, and I couldn't see anything, except for last year at this time they had a big crunch. But what I'd like to just talk about a little bit is we're now next week is the third week of the earnings season. And that's actually supposed to, or historically been more volatile and much more volatile than week 2. So we're looking for some more volatility next week. And then week 4 is the big week too for volatility, especially beating what is implied, the past moves, et cetera. And it doesn't look like, let's just see. Yeah, next week, I think it's going to be a little bit better for option buyers next week. It's a little bit high. 5% is what they usually move, and now they're 5.6%. But this season is implied a lot higher. I think those are going to come down. I think what we're going to see is these implied earnings moves coming down, and then as we've seen in some other earnings seasons, they might overdo it. So. I'm looking for some more volatility. It almost can't get worse for option buyers. So that's what I'm seeing in the next few weeks, Mark.
Since you're talking options buyers, really quick, because I know you're here pretty much to regale our listeners with earnings volatility data. We got a question here. I'm going to cheat. I'm going to bump it up to the top of the show here because this is right up your alley, Matt. This comes from Patrick, maybe Patrick. I don't know. Spells it with a C. He wants to know, if I want to buy an option during earnings season, should I buy it early or right before the announcement? This is funny because actually we're just profiling some unusual activity about this yesterday on the option block. Someone buying some size, I believe it was juniper puts with 1 day to go and paying a fair amount for them. So that is still a common occurrence out there. He doesn't really clarify what he means by early. I'm going to assume he means like maybe let's say in the week or two leading up to that. So I'm putting you on the spot here, Matt. I haven't prefaced you with this question at all, but what do you have to say for our friend here, Patrick? Should he get in there early, maybe take advantage of some diminished time decay, you think, as a result, or do you think he should get in there right for that binary yes-no event, sir?
Yeah, so this is a question we get a lot, and our back tester can do these exact, should I buy it 20 days before earnings, and should I get out the day before? So we've done all these different permutations of it. And, in general, what I'm going to say is that I just did a back test on 1,000 of the top stocks from 2007 to the present, and it was slightly better. And this was just buying the straddle before and selling it the day after. It was slightly better to buy it than to sell it, but both of them were slightly negative. So. The commissions, we're getting in and getting out, just in a couple days there. So the commissions kind of withered away a lot of that, maybe the profit that you would have had owning it. So it's tough to say. We've done, like I said, plenty of back tests back and forth, and there are, what I like to look at is I like to look at just the valuations of the volatility, and ORATS has forecasts with the earnings. Expected earnings move in there. So I'm much more kind of tactical on that and just following a stock that you think is going to move on earnings day by day. So it's but I like to buy it right before, because if you buy it too far earlier, your strikes might move away from the at the money when the earnings announcement is, and you don't have as much gamma. I think if you think a stock's going to move a lot on earnings, you buy it right before earnings, and that's the way I look at it. And I also think there's a good trade by looking at the implied volatility after earnings. Look at the expectations and the forecasts, and because sometimes there's some big opportunity in the right when they announce, and then even as the day goes on, sometimes the market doesn't know where to put that volatility. And if you've done your homework, you and have an opinion about it, sometimes there's some opportunities there, Mark.
Interesting. I would have thought maybe you would have leaned the latter. So that is interesting to me, listeners. So maybe right before it, or if you do the straddle study Matt just did, you could buy them and lose a little bit less than if you sold it. Mr. Meatball, you guys, you're crazies over there. I know you counsel against people trading earnings, but I know your crazies like to sling a little bit of earnings. So any of these hot names popping up on their radar this week? And also, I think you guys like more of the early approach on earnings vol. Is that correct, sir?
Yeah, I mean, if we're going to trade earnings, we'll trade earnings and then dump whatever earnings stuff we're holding before they announce, and then we'll trade right after. I love trading after earnings. I love trading before earnings. I think there's more money to be made there than there is in actually trading the earnings themselves. I don't think that those, as Matt just said, neither side pays out. So, it's the only trade where people are absolutely obsessed with earnings spreads. And we've now had Matt come on and say, if you buy, you are statistically likely to lose. And if you sell, you are statistically likely to lose. And yet we're going to get 50 questions on earnings. If what you're really trying to do is learn volatility and learn how to trade, then what you want to do is trade before, trade after, and use volatility, which does get mispriced. And as Matt just said, after earnings, if you know what you're doing, you have some things at your advantage, then do that. That's where you're going to make money. Now, did we have people trade earnings? Yes. Categorically, we had people all over Amazon. PayPal was one that we had people all over, things like that. And things went pretty well for those people. My Amazon guys made a lot of money because when the market opened this morning, they closed their positions. And that is why they made money. If you take a look at Amazon, if you take a look at a chart, I'm going to pull this up right now while we're talking. If you had some sort of, let's call it if you had some sort of position on the open, you were happy because Amazon opened down, about $90. If you decided that you were smart and you were going to hang on, you probably got kicked off the horse because at one point Amazon was almost unchanged. So the lesson that Amazon taught people is when you do a trade and you make money, take your money and leave. Take your ball and go home. Don't think that you're smarter than everybody, because that is how people turn losers into winners.
Indeed. So, yeah, all the legion of earnings questions we get, we're just going to punt them all over to Matt. Well, Matt, we're going to cut you loose here, but before you go here, I'm going to cheat again, because the end of the show is also fun. Spoiler alert, no one really had a 13 even handle in our crystal ball. Even though if you go the Spikes route, Mr. Meatball, you're actually looking all right. Spikes has actually ticked up over the course of the beginning of the show. We're up to about a 1360 now, and you were at a 1385. So if I view it solely through the Spikes lens, you're actually looking all right. But I digress. 1480, that'll teach Eric Metz from Spider Rock to cart me to the upside, because he put himself out of the running completely. But Matt, before you go, sir, if you want to regale us with an early crystal ball pick, now is the time, sir. The floor is yours.
What I usually do here is say something low, and Mark says from your lips to God's ears, or something like that. And I'm going to go 12. I've got these VIX.
Wow, 12 even.
And then Mark, what do you say?
I said, wow, from your lips to God's ears.
Yes. So, and I also want to plug Mark here. You know, his bet system. I want to know what those are. I was hoping that we could get to the how to become a great options trader. I'm looking at the Option Pit site, and there's a guy that kind of looks like me with a cigar and some scotch. I just got back from Scotland. I learned how to drink scotch right. So I want Mark to tell me his bet system at some time.
I would love to. Went through a webinar last week, and it was great. And happy to talk to you. And believe it or not, my bet system would work really well with the ORATS software, because that'll give you a lot of the B and the E and the T, and it'll even help with the S.
And Matt, if folks want to come to ORATS and kick the tires for themselves over there, what can they find over there, sir?
Yeah, come on over. We have every day we're sending out unusual activities, all the earnings results and earnings forecasts and the earnings season stuff. So just come on over, sign up for all the reports, get them in your email every day, midday, shows you what's going on. And also we're putting some teasers over on quite a bit of material over on the Option Insider podcast. So orats.com, and my email is matt@orats. Mark, thanks a lot for the opportunity. Mark, always good to talk with you, and you're the man to come to be a great trader. So I'm all ears.
Yes, check it out. ORATS.com is the place to go. Thanks for that early earnings hit. We'll bring Matt back maybe at the tail end of the season to see how it all plays out. Of course, you guys can find all that goodness for yourself. ORATS.com is the place to go for everything. If you want to drill down just to the earnings move and earnings move results reports, of course, we got that for you over there at theoptionsinsider.com. And Mark, I am looking at your site right now, and I see this sweet chat bot with your face on it. So it's kind of freaking me out here during the show. So I'm just gonna navigate off of that, lest it distract me. All right, let's get back to the world of all things straight broad volatility. Earnings is fun. We could talk earnings for days, but we got some other stuff to talk about here, including some action out here in the land of the futures, of course, and the options. Spike options. We'll get to that in a second. Spike futures, of course, coming on the 18th of November. So all of you who've been asking about that, the date is, I can't really say set in stone because you never know with the regulators, but it's been, let's say, carved in sand. And so hopefully that sand won't change before now and the 18th. The futures in VIX land, still in contango, obviously, pretty hardy contango. Coming in here, we had the cash right around the 13 handle. That no future was about 2.5 points north of that. And we saw almost 4 points between DEES and the cash. So pretty beefy contango out there. Mr. Meatball, anything catching your eye from a VIX futures perspective this week, sir?
Yeah, the curve is still really wide. The November's come off, but it's still 2.4, a 2.4 spread between the cash index and that front month future. Nov and December have really normalized each other. December looks really normal relative to January, and kind of the whole curve looks pretty much the way you might expect it at this point.
Yeah, and still extremely wide. You're right. Big chasm. How long have we joked about DEES being kind of the blip on the term structure? No longer. It's pretty hefty out there. Not quite. Once you get out to Jan, it still ticks up, but DEES no longer the youngin, the little baby on the term structure that it used to be. Let's go on out to the options. Let's start in Spikes land. Big prints out there this Monday. So I guess Super Tuesday is a thing of the past, listeners. It's all about Monday out here in Spikesland this week because our 1x2 friend came back for some size. He decided, you know what? Nove is good, but I'm going to roll to Dees now. Well, I guess while the getting is good out there, interesting timing for that. But we commented on that before. He actually added on last time in the middle of a time he thought maybe he would be taking it off. So he's got some other agenda afoot out there in Spikesland. But either way, he's putting up some size yet again. This week, remember, listeners, that 1x2 was the Nove 1827. He kept the strikes the same this time, changing up a little bit of the size. He did 13,500 by 27,000 of the Nove 1x2. That was the 1827. And then put it back on out there in Dees, doing looks like about 26,000 this time of the Dees 27 calls and 13,000 of the Dees 18 calls. So strikes the same, quantities a little bit different, but keeping the Spikes options love alive here again on Monday. Mr. Meatball, not quite as contentious as last time, where both you and I were kind of scratching our heads as to why he added on to that 1x2. This time, he's taking advantage, I guess, getting out there early. Do you like rolling your vol positions this early, a month ahead of time?
It makes some sense if you think about it, because, by doing that, with how wide the curve has been, if you think that curve could collapse, then you want to roll that now before things really collapse on you. So it's not entirely crazy, but additionally, VVIX, the VIX, which would which best we don't really have a Viking yet. The Viking itself would be, call it 84, 80, 80, 84. That's going to be really, that thing has collapsed this week. So there's another thing that probably would have been, really cost this guy some dough. So now that Viking has a real shot at getting into the 80s, you got to wonder where, maybe it makes sense for this guy to be rolling that thing back.
The forthcoming Viking. Simon's in town, actually. He's jumping back and forth between Chicago and New York, but he's in town for FIA, so I think we'll have him on maybe next week. Maybe not for this show, maybe on for our crypto program, because this schedule is kind of crazy. But we will get Simon back on. We'll hear in person about the upcoming Viking and all that other good stuff. So, yeah, the 1x2 was the big print out there. Spikes options now, 26,000. I missed one contract. 26,001 of the Dees 27s is now the number one position out there. Number two in Spikes land, the Dees 18s with about 13,055. So a little bit extra piling in. 8,500 still of the Nove 27s and 4,250 of the Nove 18. So he still has some of the 1x2, which is interesting. Unless a second player came in, that was him piggybacking last time, and he hasn't rolled yet. That could also be the case. And then we got Dees 26s closing it out. Total about 52,000 contracts open in Spikes land. So active time out there in Spikes land. Let's roll on into VIX, see if we can say something similar. Today, not so much in terms of activity. Coming into the middle part of the show here, we see a little bit north of 250,000 contracts on the tape. That's not bad, but it's not, we've seen VIX do obviously a lot more. Not a lot going on out there today. The ADV has shrunk markedly since our last show. It's down about 80,000 contracts. It's barely over 400,000 right now, 403. So that's like a seasonal ADV from, late July, early August kind of thing, where usually people are out on vacation. That's pretty light from an overall ADV perspective. Let's see what's lighting it up here from a top VIX positions perspective. Number 10 only takes you 104,000 contracts to break into the top 10 in VIX land these days. That's the Nove 14 put, our first of several puts here on the list. Nove 14 put, 104,000. Number 9, also 104,000. Of the Nove 28 call. Then we get up to number 8, our second puts, the Dees 16 put here with 110,000. And then number 7, 116,000 of the Nove 32 halves. Number 6, actually we got three puts here on the list this week, 118,000 of the Nove 15 puts. Number 5, VIX 25 calls, $128 on the tape. Number 4, 129,000 of our old friends, the Dees 37 halves. Number 3, the Nove 20s, 162,000. Number 2, the Dees 21s, 212,000. Number 1 with the bullet out there in VIX land right now, a little bit shy of 250,000 of the Nove 30s. Total of about 5.7 million or so outstanding, about 4.3 million on the calls, and about 1.4 million on the put. So OI kind of light, ADV kind of light, volume kind of light. Mr. Meatball, anything standing out to you in this week that was overall pretty light from a VIX options perspective?
Yeah, a pretty decent-sized weekly trade went up. There's been a few of them. A trader came in and sold the November 27th 21 calls, 15,000 times at about 55 cents. We had a December 25 call buyer pay about 65 cents tied up. And the biggest spread we saw, a time stupid seller. He sold the Nove 32 calls and the December 40 calls at 7 cents and 16 cents respectively, tied up with a reference to futures. And, maybe my favorite trade, a customer bought 32,000 of the December 15-16 put spreads for 52 cents.
Yeah, and I saw that one going up today, and I figured that would register with you, sir.
Yeah, I don't like the price, but I get the trade. That seems a little, I would have done that a little differently, but I get the trade.
Yeah, I'm never overly enthused with these one-handle put spreads. I get why they make a little bit more sense in the downside in VIX because there's not as much room to play with. I think as your compatriot there, the Rock Lobster would probably say, I think that's like kissing your sister, especially at that price, sir.
Indeed.
Using his main colloquialisms here on the show. Yeah, kind of a light week overall in VIX options land. Mr. Meatball kind of hit the highlights. We'll just go through it really quickly. Monday was the light day of the week. A paltry 166,000 contracts on the tape. The big print, about 13,500. The Nove 22s going off near the bid there. Also 10,000 of the Dees 50s. The 50s, interesting, for 11 cents. Looks like someone maybe dumping 10,000 of those to get the heck out of Dodge. They decided 50 ain't happening between now and Dees. Getting the bid they could find. Tuesday, 210,000 contracts going up, so also a light day. The big print out there, the Nove 21s going up for 14,000 contracts. Wednesday, also a light day, 185,000 contracts on the tape. We had a whopping Nove Jan roll / call spread for about 5,500 contracts. That shows you how light things were. That went up 20 Nove 20 calls versus the Jan 27 calls, 5,500 times on that. Looks like maybe they're rolling that short out to Jan. And then also 13,000 again of the Nove 21 calls going up 59 cents. So a bit of interest continued into Wednesday for those Nove 21s. Thursday was, I can't really call it a busy day, a busier day, 253,000, so a little bit north of 250,000 calls. Bit of a Nove call palooza that day. Nove 25s, Nove 20s, and Nove 22s. And Nove 23s all printing more than 10,000 times the biggest print, the 20,000 lot of the Nove 25 calls for a whopping 27 cents mid-market, because what fun would it be if it wasn't? And then, of course, today, Mr. Meatball talking about that fun put spread that went up 30-odd thousand times today. 15-16 put spread here, listeners. Yeah, that's an interesting one. Not my favorite, but hey, some folks out there might like. I also saw a 50,000 lot of the April 65s going up for a whopping dime here today. That's an interesting one. That's opening, so someone reestablishing an opening over there on the April 65s dime, so pretty much right mid-market, so pick your poison. I'll have to dig into the ball a little bit, see if they gobbled those bad boys up. But we've seen crazier flyers. April seems to be the time when a lot of crazy upside flyers like to come into VIX land, so that wouldn't be surprised if that guy was actually buying those. And like I said, today was about 260,000 contracts on the tape. Let's keep on rolling. Pun intended to our old friend out there, the product you guys love to fade so aggressively. Good old VXX, hitting that 20 handle today, right around it today. So that puts it off about 1.5 handles from our last show. So it has delivered that downside movement a lot of you were hoping for when a lot of you were complaining that it was overpriced, especially to the downside about a month ago. It kind of was, but it still ended up delivering. So I guess at the end of the day, if you could put up with some of the vol erosion that has gone on out there. You did all right from an underlying perspective. Big positions out here really quickly. Let's run through them. Actually, no, these went out. I'm sorry, these went out. You know what? These are from last week. Someone put in my last week's numbers here for VXX. How dare they? As I say, 22 puts. Those are gone. So, yeah, let's bump these over. Let's look really quickly here. Let's see. You know where we could find this stuff really quickly, listeners? If you head on into our old friend, the Flowmaster. Let's see what he's got. We type in VXX in there. It could do this. There we go. All right, that's a little better. All right, let's do the top 5 really quickly here, listeners. Let's see. Pretty much, as you might imagine, all know all the time, except for some OCT25 puts going out today. Let's see. We got 29,000 of the NOV 60s for number 5, not 29,000 of the NOV 28 calls. 60s, wow. Those are optimistic. Number 4 is the NOV 28 calls, about 29, almost 30,000 of those. Number 3 here, the OC 20.5 puts with about 32,000 open there. Number 2, the Jan 22 puts, also looking good right now. And number 1 here, the NOV 35 calls with 44,000. So it's calls to the upside. Today, a big print, actually, about 3,300 of those 20.5 puts for 35 cents. So they continue to trade today through the offer. Someone really wanted to get those bad boys, so getting advantage of some of that downside. Mr. Meatball, how you liking? How are your crazies, I really should say? How are your crazies liking the little bit of downside we're seeing out here in VXX these days?
They've been happy about it. I will say that much. There were some people leaning really short into this with the curve as wide as it's been. We've seen a lot of people trading it extremely short, and that is absolutely kind of paying off here today, isn't it?
I've seen worse trades.
Really, all week. And, at some point we've been kind of expecting this to happen. It's just kind of a matter of how long and when. And that has started to rear itself the last couple of days. That curve is really setting up for VIX to and more VXX to take a real dive. If you were going to look at kind of the daily decay in VXX, with where it's pricing itself, that the quote unquote roll yield, which we all know isn't real yield, is like 13 cents a day. Now, when it gets that wide, that has tended to be when we see the turnarounds, but I'm not sure if it's really set up for that to happen. We would need some sort of real major event change here for that to rear itself at this point.
We would need a major event as well. We also need some major questions from you guys. Luckily, we got a bunch. Let's get to them with a little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. You guys know how to get at us a lot of different ways. Email, social media, via our apps, via our website feedback form. Or, of course, you can hit us up in the live stream. That gets to us the fastest, actually. Looks like Studini doing it right now, asking us, did you guys mention the April 65s? Well, yes, we did. Studini, those are, of course, the VIX calls I mentioned that were going up today. That was kind of one of the bigger prints of the week, actually. 50,000 of the April 65s going up for a dime. That's exactly mid-market. I'm going to go out on a limb and say that's probably an upside buy. Of course, it could be someone doing a bit of a funky override against maybe some futures and trying to get that dime. But interesting. Mr. Meatball, if you had to guess, 865s going up for a dime, what do you think? Buying or selling those bad boys in VIX?
The April 65s going up at a dime 50,000 times. You would think that's, I mean, the market's dime 15, so I'm thinking they're a buyer, but you never
bid
know.
out still. He wants more, huh? Okay. Interesting.
Yeah, but if you look, who knows would be my answer. But they could be a buyer. I do notice that the market is, well, when did this go up? This looks like it went up about an hour ago. They might, you know what? I'll bet you they were a seller. I would have been a buyer, but I'm guessing they were a seller.
And again, my listeners, they obviously have something else. Doing 50,000 contracts, you got something else against it. Could be a funky covered call against some futures, getting out of that 65 level. Could be a bunch of things going on with this. They have some long vol, and they're dumping some upside against it. But straight up on its own, on the surface, you would think there might be a buy. But hey, interesting stuff. They went up at 1241 here, I believe. All right, let's go on. Let's see what else we got. Or I should say you guys have on the brain here. DISL. D-I-S-L. DISL. Maybe he's trying to be a funky way to spell diesel. I don't know. Either way, he or she asking, this is the topic we touched on before, but it's been a while, Mr. Meatball. He wants to know, or she, does VIX really have a skew? And the answer is, of course, yes, but it's kind of a funky one. I know this is a topic that is a hot button one for you, Mr. Meatball. So I'll let you dive in first. What do you have to say here for Dizzle, who wants to know, does VIX really have a skew?
Yes, it does. That would be my answer. Just everything's got everything's got a skew to it, and skew really derives from who's trying to use the product. And, demand in VIX is derived from people buying, worrying about upside, not really worrying about downside. And so upside calls get bid. If you look at equities, where the fear in equities tends to not be upside, but more downside. And so equities tend to have a skew that is bid on, below where the underlying is trading. Things like oil and gold, they tend to either have kind of a smile because people are more worried about movement either way, or they'll have a skew similar to VIX where they're worried about it rallying. So VIX, in fact, does have a skew, and it is to upside. And taking a look at these April calls, they really do look like they were a sale, but I'm going to get confirmation from Tubby.
There you go, straight to the horse's mouth, or in this case, the tub master's mouth. So you go, listeners. You ask these questions, you get live answers here about VIX paper. Interesting stuff. Yeah, and Dizzle and everyone else who asks these questions. At the end of the day, there's all these very in-depth, academic treatises about all things driving skew. But at the end of the day, skew is a phenomenon of the paper flow in the product. All these other considerations, what the paper is doing is what creates and shapes the skew. And we see that, even though VIX is a derivative of a derivative, so that made people think, it shouldn't have a skew because it should be derived from these things. But it's a tradable product. Once it's a tradable product, it's got a little bit of a life of its own, a little bit of its mind of its own, and it's going to have a skew of its own. And we see it in VIX. What's the use case for VIX? 9 times out of 10, they're buying calls, right? Maybe not so much this week, but usually that's the case. And that's going to result in a skew shape. That's going to be obviously got some bias to the upside. So that's why, at the end of the day, VIX does have a skew. And it's a tradable product. If it's a tradable option product, it's going to have some sort of skew built in there. It's just a question of deriving what it is. That's why our TWIFO show is so fun, because all those different commodity products, the skew's moving all over the place. It's not just your typical equity investment skew of calls or bid, puts are offered. It could be the smile, like Meatball was talking about, or it could be calls or bid, could be puts or bid, it could be all over the place. And that's what makes that kind of fun. VIX does have a skew, and it's an interesting one. Speaking of interesting, I like this. A couple people sent this in. This one happened to come from Telltale, but I don't know who this cartoonist is. I'll have to find Senior Graffo. Someone out there likes doing cartoons about SPY puts. And we'll put this in the show notes, listeners, so you could see it for yourselves. But this is the cartoon of obviously a dad kind of stick figure with a mustache and a little baby boy stick figure. And the dad says the little boy's got a dollar in his hand, money in his hand, and he hands it to him. He says, "Billy, it's time you learn about money and the importance of," and Billy takes the money and he runs off. And the final block of the cartoon is Billy at a big box that says SPY puts on it. And he's putting the money in there. And the dad's like, "Billy, no." And the little kid's look on his face, it just cracks me up. So I don't know who this cartoonist is. Maybe it's Image Flip. Maybe that's where the guy got it from. We shared it with us. But I guess it's Senior Graffo. I don't know who that is. But whoever he is, he's a genius. I love it. Keep these spy puts cartoons coming. Mark, have you seen these? I don't know who out there is making a living as a spy puts-oriented cartoonist. But I love it. I love that it exists, sir.
No, but I love it too. And I have confirmation now. It was a buy. It was 100% crossed, and it was committed, meaning that somebody paid a nice commission to make sure the whole thing got done. So it was a customer buyer, $50,000 paying a dime. The broker crossed the entire trade.
Look at that. Who was that who asked that study? And you see, ask live, and you shall get straight from the horse's mouth, or indeed the tub master. I saw the tub master recently. He was saying he wants to come back on. We'll have to get him back on one of these days. Maybe do one of those live from the pool house. If we can get the pool house noise to settle down out there, that'll be a fun one. You know what else is fun, listeners? Is watching us make fools of ourselves trying to wrestle down the VIX and volatility gods. So let's do that without further ado and dive right on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, you guys know the drill. This is the difficult, the dangerous portion of the show. This is what separates the wheat from the chaff, the men from the boys. Call it what you will here. It's the hard part of the show. And of late, it's been a wee bit more difficult. You know, I was hitting some bullseyes pretty good and have a good track record so far this year. And then last couple of weeks, not so much. Just to break down where we were last week, I was at a 1465. Our guest, Eric from Spider Rock, completely unceremoniously cart me to the upside at a 1480. So he's not coming on again anytime soon. And then the meatball was to the dark side, 1385. Coming into the end of the show here, we're seeing VIX Cash still hovering around that 13 handle, about a 13.15 or so. But our old friend Spike's got a little bit of that juice back in it. It's at about a 13.55 or so right now. So, Mr. Meatball, the fact that we do a double prognostication has worked in your favor because you're almost a handle away on VIX land, but about a third of a handle on Spike's land. So I'll give you this one, sir. What do you say?
I say go me.
Go you indeed. All right, yeah. So that means Matt already went. I'll refresh your memory. He went at a very aggressive to the downside 12. So you got a lot of room to play with, Mr. Meatball. Where are you going to go for next week?
You know, I'm going to go, and I think that we're getting there. I'm going to say 1267.
1267. So some erosion, but not quite as aggressive as Mr. ORATS there.
Right.
12. So we got a 12 and a 1267, listeners. And the reason I've been losing the last couple of weeks is I've been playing the not so much in the erosion camp, actually kind of back down, and actually a little bit up week over week. This week will kind of be the telling point of that, I believe, because either we'll know for certain if we're going to be down where Matt and the Meatball are predicting, which is they're kind of wringing all the last bits of juice out of the market, or we're going to get something to bounce us back to kind of where we are. So I'm going to play in that neck of the woods. Like I said, we're at about a 13.55 in Spikes, about a 13.15 in VIX Cash. I do kind of like that Spikes level for this time next week. So that's where I'm going. I'm going at a hefty 13 double. So there's your market, listeners. Kind of wide this week. 12 on the downside with Mr. Matt from ORATS. Then we got ourselves a little bit of the old middle ground with the Meatball at a 1267, and then topping it off once again. I feel weird. I'm playing the Russell Rhodes role here of buying the upside, but I find myself in the upside seat yet again here at a nice juicy 13 double. All right, listeners. Unfortunately, you know what that music means. We've come to the end of our epic sojourn through the world of volatility. Oh, what a journey it was. We started off talking about a bunch of earnings, Vol, talking your Twitters, your Amazons, all that good stuff that was popping off this week. There's a lot more popping off next week and the coming week. Apple hasn't even reported yet, so all those big names that you guys know and love to hate and love to love are popping off. You want to find that detail and a bunch more, best place to go, theoptionsinsider.com. Click on that Options News and Articles tab, top right corner of the homepage. That'll get you right there to all the stuff, the latest and greatest of all those, for not just those big names, but hundreds of them. There's also an earnings season report. You can see how this season stacks up to last season, so all kinds of good data. If you trade in and around earnings, you're just curious about this stuff, I know most of you are, that's the place to go. And of course, if you want to see the full breadth of what they got available, including the back testing and everything else, ORATS.com, ORATS.com is a place to go. Give Matt a follow over there on Twitter. He puts out some good data as well. It's Option Rats, OPTION Rats.com. It's a memorable handle. You can't forget it. And Mr. Meatball, I had to put it away. Your chat bot was mocking me throughout the entirety of the show. But if I want to engage with that chat bot, maybe I want you to text me throughout the week. So I can't, your once a week appearances on Vol View is not enough to do for me. I want you texting me intraday. Where should I go? What should I do?
Yeah, you can join our Option Pit membership, our silver membership. We put out a research report once a week. We send out texts when I'm closing, when I'm opening. And it gives you a real opportunity to kind of see what I'm doing. Additionally, you can check out my bets webinar that I did last week on our YouTube channel. And I am doing a webinar for CFPs and RIAs and money managers on Wednesday at 2 o'clock Eastern time. I'm covering covered call use and basic hedging that really all money managers should know, and many do not.
Yeah, I saw that. You're giving out CE credits now. Look at you, sir, moving up in the world.
I know. Come and you can get a continuing ed credit if you're a CFP. Pretty freaking awesome. So come and check it out. I think maybe I'll get Tucson to show up. I think he needs some continuing ed.
Yeah, he probably does, and he doesn't know what these covered call things are. But you're right. It is kind of scary how people in this space who are professionals in all other aspects of the space don't even know very basic things like covered calls and protective puts. So I'm glad they have a CE class out there that can give it to them. Check it out, listeners. For yourselves, maybe you want the texting. Maybe you too want to play with that chat bot. OptionPit.com is the place to go. And on behalf of the Meatball and our buddy Mr. Option Rats over there at ORATS, Anna D, myself, and our friends at MIAX who couldn't be here today, but will be in town next week, so we'll be talking to them. I want to thank all of you for downloading, streaming, and subscribing, and we'll see you next week for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.